Hey everyone, in this video I wanted to conduct some financial statement analysis of one of the most popular AI stocks in the market today. That is SoundHound AI stock. I'm going to look at its financial statements, its income statement, and the balance sheet and determine what's been going on, the trends in the company, increases in revenue, the particular costs, and things that SoundHound AI stock investors should pay close attention to if they're considering this AI stock to buy. So without further ado, let's jump into this financial analysis.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so what I have pulled up and what I have analyzed here is SoundHound AI's latest 10K statement. You can retrieve this document by going to SoundHound AI Investors Relation website and toggle to the site that gives you the 10K statement. It should be clearly in front of you on that first page of the Investor Relations website. So I've already went through this statement and I've highlighted the key numbers that I think SoundHound AI stock investors need to look out for. So starting with the top line, which is revenue. SoundHound AI's revenue over the last 3 years has increased from 21.1 million to 31 million to 45.873 million. The company has demonstrated nice revenue growth. However, let's take into account each year specifically. Let's look at going from 21 to 22, 2021 to 2022, that is. Revenue increased by about 10 million from 21 to 31 million, but that was not really organic growth. And I'll share with you why that's the case. If you look at sales and marketing from 2021 to 2022 increased by more than 16 million. So sales and marketing increased by more than revenue increased for the year. That's always a telltale sign that organic revenue is not very strong for a company because they're spending more on sales and marketing to boost revenue. Think about any business. You can boost sales by increasing advertising, increasing marketing efforts, offering promotions, incentives, discounts, and on and on. All of that would be categorized under sales and marketing. But when sales and marketing are falling and your revenue is rising, that demonstrates organic demand for your product, which is what we saw from SoundHound AI in 2023. They decreased sales and marketing and their revenue increased. So that was a better year. 2023 was a better year for SoundHound AI in terms of organic revenue growth. Still, if you look at the company's loss from operations, it's still losing money on the bottom line and in operating expense. You can see operating loss increased from 65 million to 105 million. That improved to 68.6 million in 2023. The company undertook a major restructuring effort early in 2023, and that started to pay off in 2023. One of the areas it cut spending was sales and marketing. It also slashed spending on research and development. And you could see that here research and development fell from 76.4 million down to 51.4 million. All right. Moving on. Something that SoundHound AI stock investors should pay close attention to is its interest expense. You can see interest expense has increased meaningfully here, up from 8.3 million in 2021 up to 17.57 million in 2023. This is a large percentage interest income. 17.57% is more than 1/3 of its revenue. So more than 33% of revenue is going to interest expense to pay down debt, to pay down interest costs on its debt. That's a high level of interest expense. If you're a SoundHound AI stock investor, you would like to see the company start to generate cash flow and use some of that cash flow to pay down some of this debt, because this debt is a burden on the company right now. So the sooner it can do it, the better. Right now, it's still in its fast growth mode, trying to serve the expanding needs of artificial intelligence. And when it gets to the point where it's generating cash flow, one of the first things you want to see the company do is pay down this debt so that the interest expense can be relieved from the company's financial statements. So the net loss is still meaningful, right? Increasing from 79.54 million of losses on the bottom line up to 116 million in 2022, and at least it improved slightly to 88.93 million in 2023. So the company's losing roughly twice the amount of revenue that it's generating. It generated 45.873 million in revenue, and it lost 89 million on the bottom line. So it's a money losing company. Thankfully, it's growing rapidly, and hopefully this growth will start to generate cash flow in the near term. Management did tell investors that they expect to be profitable on an adjusted EBITDA basis in 2025. Adjusted EBITDA is earnings before interest, taxes, depreciation, and amortization. And that's a proxy for cash flow. Hopefully, they are able to achieve that forecast. That will give the company some cash flow that it can use to pay down some of this interest expense, which will then boost profitability even more, which will then give it even more cash flow to pay down even more debt, and it can feed a positive virtuous cycle for a little while until it pays off all of that debt. Another thing SoundHound AI stock investors should pay close attention to is shareholder dilution. You could see the weighted average common shares outstanding over the last 3 years have increased meaningfully, up from 67.255 million all the way up to 229 million. So almost 4 times the shareholder dilution. And the reason why this is important is because when or if the company ever becomes profitable here, the net income, as I shared with you, this net income will be shared with more outstanding shares. So it'll be split with more shares and thereby decreasing the profit per share. You can see its net loss per share has been improving primarily because it's been adding more shares. And so when you're splitting a loss among more shares, the loss per share is decreasing, even though you can see from 2021 to 2023, their net loss on the bottom line actually increased. Their earnings per share has decreased. The loss per share, I should say, has decreased from $1.18 loss per share to 40 cents loss per share. This is only because they added more shares, and so you're splitting up this loss with more shares, and so the loss per share looks like it's improving, but it's only because they're diluting shareholders. So this is something to pay close attention to as well. So I also wanted to take a look at SoundHound AI's cash flow from operations, and you can see the net loss has been improving. We already looked at the net loss, but one factor to consider is stock-based compensation. So one of the main reasons why SoundHound AI has been diluting shareholders is they're using stock-based compensation to pay employees. And of course, they made an acquisition where they used a lot of their stock to acquire the company they recently acquired to give it more access to the restaurant industry for its AI audio technology. And so when you add back this stock-based compensation, it reduces their net cash used in operating activities, and that improved from a loss of 94 million to a loss of 68 million in the most recent year. Now, cash flows from financing activities. The company raised a lot of cash flow from financing. It raised 24.9 million by issuing preferred stock. The company has to pay preferred dividends on that preferred stock, and we saw that on the income statement. It also issued more shares of common stock under the ELOC program. It raised 71.6 million in common stock, and it raised 85 million by borrowing money. So all of these ways the company raised money, it actually raised 168 million from financing activities. Now, that's okay, right? Especially when you're in growth mode and you're making nice progress as SoundHound did from 2022 to 2023. But I would prefer the company make money from cash flow from operations, hopefully by 2025, given that it's expecting to achieve adjusted EBITDA positive in 2025. Hopefully more of the money comes from cash flow from operations. So that's how the company funded all of its losses over the last year, is that it borrowed money and it sold stock and offered preferred shares. This is going to impact the company through shareholder dilution, which we saw. It's going to have higher interest expense, like we saw, and it has to pay preferred dividends, which I didn't go over too much because it's not such a large number for SoundHound AI. So this was an informative look through of the company's income statements. I learned a lot from going over SoundHound AI's income statement. The company is growing rapidly. Demand for its products are growing rapidly, and it did a good job of controlling costs, bringing costs down in 2023, so that going forward by 2025, the company can achieve positive cash flow from operations. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.